The U.S. durable medical equipment market is entering a period of sustained growth. Demand is increasing, investment is accelerating, and long-term fundamentals remain strong. But at the same time, new CMS rules taking effect in 2026 will significantly change how DME providers operate, expand, and market their services. Understanding where the market is headed and how regulation is evolving, attach will be critical for providers looking to grow successfully in the years ahead. Industry analysts project the U.S. DME market to grow at an annual rate of roughly 5 to 5.5% over the next 5 to 8 years. At the end of 2024, estimates place the market between $62 and $68 billion, depending on the source. At that pace, the market is expected to exceed $90 billion by the early 2030s. This is not short-term cyclical growth. It reflects durable demand driven by long-term demographic and healthcare trends. So what is driving this steady growth? The first major factor is the aging U.S. population. Seniors represent the largest segment of the DME user base, and the range of qualifying equipment is extensive, from mobility aids and medical furniture to bathroom safety products and therapeutic monitoring devices. Today, there are approximately 60 million Americans aged 65 or older. As baby boomers continue to age and life expectancy increases, that number is projected to rise to more than 80 million seniors by 2050, creating sustained demand for DME across multiple categories. A second major driver is the growing prevalence of chronic disease. According to the CDC, nearly 60% of U.S. adults live with at least one chronic condition, and roughly 40% manage multiple conditions. Diseases such as diabetes, heart disease, and COPD require ongoing monitoring and therapy, which directly increases the need for durable medical equipment. At the same time, there is a strong and growing preference for home-based care. Nearly 90% of seniors prefer receiving care at home rather than in institutional settings, further accelerating DME adoption. Technology is also reshaping the DME landscape. Innovations such as connected devices, remote monitoring, and IoMT-enabled equipment now allow real-time data to be shared between patients and care teams. These tools support earlier intervention, better outcomes, and more efficient care delivery. As DME becomes increasingly integrated into broader healthcare workflows, providers that embrace technology will be better positioned to compete and scale. While market fundamentals are strong, CMS's 2026 Home Health Final Rule introduces meaningful operational changes for DME providers. These include annual accreditation surveys instead of the current 3-year cycle, the elimination of temporary accreditation for new locations, and new reaccreditation and re-enrollment requirements when majority ownership changes within a 36-month window. CMS has also increased oversight of accrediting organizations and reaffirmed that surveys will remain unannounced. Together, these changes significantly raise the bar for compliance, transparency, and operational readiness. These regulatory changes make operational discipline more important than ever. Providers with strong compliance systems, consistent accreditation readiness, and proactive claims validation processes will be far better positioned to grow. Those that treat compliance as a one-time exercise rather than an ongoing discipline may struggle. In this environment, compliance is no longer just a regulatory requirement. It is a competitive advantage. The DME providers that combine strong compliance with thoughtful, value-focused marketing will be best positioned to capture growth opportunities in 2026 and beyond. For a deeper breakdown of these trends and what they mean for your business, the full written article is linked below.